On Friday intraday, we saw stocks selling off. However, once they hit this critical level, we've seen stocks start bouncing up. Over the weekend, Trump has captured Maduro. Is this about to cause volatility out here in the stock market? On Friday, depending on what market you were looking at, you might have thought it was a good day for the market or a bad day. We look at how the indices fared across the board. We can see the Nasdaq was the only one of the four major indices that I watched that was down on the day. And even when we come over and look at advancing issues versus declining, we had 58.7% of issues advancing on the day. Now we come over and look at the sectors across the board. On Friday, we basically only had 3 sectors in the red. Every other sector was in the green. And one sector I most certainly want to pay attention to is look at energy. The one-day performance was the best performing sector out there. We come over and look at the 1 week performance. We can also see it was the best performing sector out there as well. So were there people already in the know that knew Trump was about to go ahead and capture Maduro? And even so now, Trump is saying that the US is going to run Venezuela until they get things in order and they get a new leader and such. I want to take away some key points from this article. One of the things it talks about is the capture of Venezuela's president by the US is expected to pressure oil markets and potentially impact other financial markets. And that was certainly something we want to pay close attention to. Also goes on to say a more favorable Venezuelan government could increase oil production, but that would require significant investments. It even goes on to say that oil prices are predicted to fall by 4% when trading resumes, benefiting U.S. refineries, but it also says harming Canada heavy oil producers. Now, one thing I want to think about real quick is we already knew that China was sending some tankers over there to get oil and such. And we know that Russia's been financing a lot of the conflict over the Ukraine off of oil. What happens if oil prices start to come down? On the daily chart, I've been warning about this for quite some time. When we come over and we look at crude oil, notice crude oil has rallied a little bit off this low. And when we look over here to the left, this is right near a prior swing point. So if on Sunday night or Monday, do we see crude oil trade a little bit lower? Or is the market going to sniff out that there could be potential chaos over in Venezuela? And we're going to see crude oil actually start to rally on the way up. Well, something I really want to pay attention to is let's look at these 2 swing points. The one right above us at 58.98, if crude oil gets above that, well, then I can see crude oil going to maybe 60 or even up here towards this high volume node at about 63.19. If we start breaking below the low at 55.06, I really want to start looking at the weekly chart and look how dangerous this looks. You can see we had the low, we had a rejection up, and now we just kind of been wedging down there. And that really lends me to believe just by looking at the chart, we are going to see lower crude oil prices. And something I've been warning traders about for quite some time is with crude oil prices going as low as they are, that could be a warning sign that economies around the world are starting to weaken. However, things could change this time around because if we're going to get more supply of oil on the market, we could then see oil prices down, inflation go down even more, and maybe that'll actually end up being a bullish catalyst out here for stocks. Well, if you believe that's going to be the case, what about this right here? Saks CEO steps down ahead of expected bankruptcy filing. I don't know about you, but bankruptcy certainly does not seem like something we want to see out there in the economy, especially when we're looking at a larger company. And also, let's not forget, investors pinned hopes on the January barometer with stocks set to skip Santa Claus rally for the 3rd year in a row. And this is the first time in history this has ever happened where 3 years back to back, the Santa Claus rally actually produced a negative gain. Now, some traders say Santa Claus rally ends on January 2nd. Others are saying January 5th. Let me know in the comment section down below. When do you guys think the Santa Claus rally officially ends? Now, we come over and look at this chart right here. This chart is a little bit scary in my personal opinion. I've been warning about this week after week, but look what we have going on. The 10-year versus the 2-year yield. Notice we are starting to get a steepening of the yield curve. This is not good. This could be problematic. Keep in mind, back in April when the markets were selling off, look at how steep that yield curve was getting. And once again, we see the yield curve starting to steepen once again. Now, when we come over and look at the dollar index, we've been tracking this double top pattern. Top number 1, top number 2, we broke right below the neckline. We have failed to make it all the way down towards that level, but I most certainly want to pay attention to. Do we see the dollar start to falter and come back down, potentially taking out that level a little bit below us? And keep in mind, as we look at the dollar, that kind of influences on the yields as well. The 10-year yield is most certainly one of the yields I want to pay attention to. And look what we see on Friday. We see the 10-year yield also breaking up higher and actually closing at the session high, really threatening a breakout of this area. And keep in mind, if we do break out, we can see the 10-year yield spiking up to 4.354, and that would complete the ABC pattern. Now, if the 10-year yield starts to spike up even more, we could see more volatility out here in the stock market. Now, when we come over and take a look at the volatility index on Friday, we actually saw the VIX was down 2.81%. So if you were trading, let's say the Nasdaq, you say, oh, this is horrible, we had a nasty down day. Well, you can take some comfort in the VIX. It was showing that there was simply no fear out there. Now, maybe that's good, maybe that's bad, because if nobody is fearful out there, could it be a case where we see traders get caught off sides? They're a little bit too complacent, and we see that huge volatility spike come creeping up. Now, when we look at this next chart real quick, this could be the SPY versus HYG. HYG is high yield bonds. That's going to be the chart on the bottom. And notice we've had this declining trend line for quite a bit of time now. And every time we come up to a trend line, we reject back down. Now, this last time we rejected off the trend line, we had a shallow retracement off of it. And now we're right back at it. If we can get above that declining trend line, maybe that'll show that traders are more willing to take on risk. And if that's going to be the case, maybe we'll see the markets turn around. But when we look at the SPY up here, notice the SPY was able to make a new all-time high roughly in this peak here, and HYG simply was not confirming that one bit. Now, something that's not making new all-time highs is Apex Trader funding. All account sizes, only $19.60, and special pricing for the activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. Then we come over and look at the Dow Jones versus Transportation Index. Dow Jones is going to be the chart on the top. Transportation Index will be the chart on the bottom. And look what we have going on over here. We've had this decline in trend line. We've clearly broken out from it on the Transportation Index, and it's still holding up rather well. And even if we zoom this up a bit, for last week, we basically have what could be a hanging man candle up here on the Dow Jones. And notice we've had this upper level consolidation. So we'll see if we start to break below the low of that candle. Now, when we look at the economic calendar real quick this week, we have ISM numbers on Monday. On Wednesday, we're going to start to get some jobs data. We get the ADP non-farm employment change. We get ISM services PMI. We get JOLTS job openings. But even more important, the most important day out here this week is not going to be Thursday with the weekly unemployment claims, but we're actually going to get a full reading of the non-farm employment numbers. Now, they're anticipating that we're going to create 57,000 jobs, and we'll see if they actually revise that last job numbers that we actually had out, and we'll see if that unemployment rate spikes up just a bit. They're anticipating it's going to drop to 4.5. Now, when we come over and look at the fear and greed index, we are back over into neutral territory just by a smidge little bit. On Friday, we have a closing reading of the fear and greed index at 45, and we'll see if that changes out there with the developments over in Venezuela. Then we come over and look at the most recent investor sentiment survey. This week, we saw the bullish sentiment jump up from 37.4 to 42. However, look at the neutral category. It also jumped up from 27.8 to 31, and the bears actually dropped down from 34.8 to 27. So does this mean the rally is on? Hold on, let's go ahead and rally up. Not necessarily. We come over and we look at the S&P on the monthly chart. Start off looking at the SPY. MACD indicator up here looks a little bit tired. Does that mean we have to pull back right here, right now? Not necessarily, but on a higher time frame, like the monthly chart, one of the areas I would want to watch is going to be this prior all-time high, somewhere right around 613.03. Then we come over, look at the weekly chart. Notice the MACD indicator. It already has a bearish cross. We have a couple of high volume nodes on the composite profile as well. 664, and then right up here, right about where the closing price was at about 682. Now, keep in mind, we still have a large gaping gap over here. We have that prior all-time high. If we were to pull a Fibonacci retracement from the swing low right up here towards the swing high, notice that 38% retracement really aligns very closely near the prior all-time high. And when we look right, look what we have right here on the composite profile. We have a minus development area. And if you're new to this channel, basically a minus development area is nothing more than an inefficiency level in the markets. Now we come over and start looking at the daily chart real quick. Here's where it gets quite interesting because we have a potential for either maybe like a double top-ish pattern or a potential ABC pattern on the way up. Now, if you're looking at the upper ABC pattern, which it has been confirmed, B point was already taken out, that target is going to be 709.65. However, if we get this double top number one, top number 2, then we can see the market coming back down towards the swing point over here, maybe coming over here, filling the gap first at 659.02. Now, in this scenario, something I want to pay very close attention to is the 78.6 Fibonacci retracement level. If we start breaking below 675.60, watch out. We're at minimum going to probably come back down towards the swing point. Anything below the swing point at 671.20 would then validate that double top-ish pattern, and that would most likely see price coming back down towards that lower swing point. Now, if we come over and look at the gamma exposure levels real quick, on Friday, if you pay very close attention, we had a lot of gamma exposure right at that 680 strike price. Well, if we look at the low price on Friday, the low was somewhere around 679.81. So is it really any surprise we've seen the market start to rally back up? Something I do want to caution you guys on real quick is with the S&P 500, right now we are currently in negative gamma, which means that we could see cascading effects to the downside. We could actually see some type of waterfall event. So this is where it's going to be important for this week and the coming days. Let's see, can we hold 680? If we can, well, we can see we have some other high gamma exposure levels above us. One of them being right around 690 and then right around 694. Anything above that, we have quite a bit of gamma exposure at that 700 strike price as well. Now, when we dive down, we start looking at, let's say, the 4-hour chart. MACD indicator does have a bearish cross on the way down, but I also want to caution you guys because we could be setting up an ABC pattern within an ABC pattern. Keep in mind, on the daily chart, we already talked about that larger ABC pattern on the way up. On the 4-hour chart, it's a little bit easier to see what could be a secondary ABC pattern setting up. Now, for this, I need to grab the Fibonacci extension tool. Start off measuring right down here on the low from December 17th, and then pull it all the way up here towards the high, and then pull it right back down towards the retracement low that we saw on Friday. Now, that price completion would come in right at 700.53. And isn't it kind of ironic that we also have quite a bit of gamma exposure right around that 700 strike price as well? As we come over, look at the S&P futures markets real quick, I want to turn your attention over here to the weekly volume profiles and the 4-hour candles. Notice on Friday, we had that nasty down candle. And now we've basically come up and traded roughly 50% of that candle. Now, quite often, if we make it to at least 50% of a massive down candle, quite often we're going to erase that whole entire candle. So maybe everybody's getting freaked out about Venezuela, and we see the market actually ripping up, trapping some of the lower level shorts. Also, as we look at the volume profile, notice we just barely closed below value area low at 6903.50. So you guys know the drill. Anytime we close below value, we expect the next 1 to 2 sessions we'll come back and visit that area. And since we're dealing with a weekly volume profile, one session in this case would equal 1 week in time. So either this week or the following week, I would anticipate us hitting that value area low. Now, in the event that we can get above it, keep in mind, we do have a high volume node right here on the composite profile. 69.29 would be an additional target. And then really this minus development area, 69.39.5, then the point of control. Anything above the point of control, I'm looking back towards value area high at 69.64.5. And then I'm looking for the market to then make a run to new all-time highs. But in the event that we do something along the lines of this, we go above value area low, and maybe we go all the way up towards the high volume node. Maybe we fall a little bit short, but then we start coming back down. Then I want to turn my attentions down towards this high volume node at 68.92.5. But then more importantly, back down towards this minus development area, 68.71. And then we'll see if we get an ugly break all the way down towards this untested point of control at 68.29. Now, when I come over and look at the daily volume profiles real quick, you can see on Friday towards the end of the day, we had a pretty good rip on the way back up. Now we have 6908 as value area high. So in the event Sunday night we start trading above it, keep in mind on a 30-minute basis, we have that nasty down candle, which is part of that 4-hour candle I showed you guys a few moments ago. And since we've already tested 50% of that candle, if we get above 6908, one of the targets I will be focused on will be that candle body at about 69.32. And then we'll see if we can undo the highs from Friday and start working on some of those other volume profile levels like we talked about on the 4-hour time frame. Now, so come over and look at the QQQs real quick. Look at the last closing monthly candle. We basically had not only an inside candle, we also had a doji candle, which is a candle of indecision. So we'll see which way this is going to break. The candle before that has a potential hanging man candle. We're still waiting to see, can that candle come down and be broken to the downside? MACD indicator does look a little bit elevated and starting to look a little bit weak up and around these levels. Now, keep in mind, if we see the Nasdaq start to get a more substantial pullback, maybe back towards the prior all-time highs, that would not necessarily mean anything is broken in this market. If we go ahead and measure from the all-time high towards that prior all-time high, that would only be a correction of about 15%. That would not be a catastrophic event, and technically that would not be considered a bear market. Now we come over and look at the weekly chart real quick. You can see we have this triangle pattern forming. MACD indicator is crossed to the downside. Now with the triangle pattern, we're just waiting to see which way we're going to break. Then we go ahead just like this, draw a line across that. If we break to the downside, that would bring us to about 576.20. We break over here to the upside, we can see new all-time highs somewhere around 657 or so. Now, as we come over and look at the daily charts, this is a little bit different than what we saw with the S&P. Here's a high, here's a lower high, here's a lower high. But in this example, we also have a low and we also have a higher low. And depending on where this low actually comes in at, we might have another potential higher low. So right now, the jury is still out. We're waiting for the break in the Nasdaq. Recently, the Nasdaq has been a lot weaker as we've seen rotation out of some of the AI stocks. Now, notice on Friday, we came all the way down to the 61.8 Fibonacci level. If we were to turn from this area right here, we could actually be setting up an ABC pattern on the way up. And if we actually break above the swing point at 629.19, that would also validate a larger ABC pattern on the way up. However, we have to wait and see, can we break at least one of these swing points before I want to go ahead and draw out that ABC pattern to the upside. Now, one thing I also want to pay attention to is let's come over and look at the gamma exposure levels. We can see right down below us, right around 610, there's a lot of gamma exposure to the downside. And if we look at what the low price was on Friday, we had a low of 610.20. Just like what we saw with the S&P 500. And what I mean by that is, as we came into a high gamma exposure level, the dealers went ahead, protected that position, and at least in the short term, was able to get a bounce back up. If that 610 level breaks, watch out for 605 and then potentially 600. And if we look at where those levels come in on the daily chart, 605 would be just below the 786, which means looking at Fibonacci perspective, anything below the 78.6, I then expect 100% retracement or more from that point on. And also notice where that swing point is at 600 is right near that swing low. So if we start breaking 78.6 this week, I want to be looking towards the downside. If we can turn from this area right up in here and we start challenging these highs, then I want to be a lookout for a possible ABC pattern on the way up. Now, on the 4-hour chart, we can see that triangle pattern playing out. MACD indicator is right near the zero line, but we do have a bearish cross of the MACD indicator. And if you look at the peaks in the MACD indicators, you can see they're kind of correlating with price. They are also making lower highs. On the 30-minute chart, what do we have going on? Well, on Friday, notice we have that massive gap on the way up, only to give it all back up. And now, if you look at this from a 30-minute perspective, this could be part of a bear flaggish looking pattern. Now, when we jump over and take a look at the futures markets, something that's a little bit different than the S&P 500. Look how far away from value area low we're closing. We close miles and miles below that area. Now, the same rule applies anytime we close outside of value, this time being below value area low, which comes in at 25,562.75. I expect the next 1 to 2 sessions, we will come back and at minimum test out value area low. Since we're dealing with a weekly volume profile, one session would be 1 week in time. Now, in the event that we can get above this structure breakout point right here, which we were talking about this on the live stream on Friday, this would be a nice target location. You can see the Nasdaq actually shoot it up towards that level. Now, anything above that, I want to turn my attention towards the high volume node, which is just above value area low at about 25,665. Then let's see if we can re-auction the minus development area, try to target the point of control, 25,696 and a quarter. Then from that point on, I'm looking at value area high and then the high volume node at 25,866. If we can break above that, we also have an untested point of control at 25,960. But notice, if we were to hit that point of control, we would then take out that swing point and that would validate at least one of the ABC patterns to the upside. Now we come over and look at the daily volume profiles on the 30-minute chart. You can kind of see we had most of the volume being built out throughout the day at the lower end of the range. You can see right here, right after the open, we shot up, boom, we came crashing right on down. And then we basically formed a lot of volume down in these areas. Now notice value area high is way up here at 25,600. We have the point of control, 25,384. Value area low would be 25,305 and a half. So if we start trading below value area low, I want to pay very close attention. If we're trading below it, I want to look for lower prices. And more specifically, I want to turn my attention towards this high volume spike at 25,196. We break that. The next high volume node at about 25,087. Then from that point on, I'm looking all the way down here, back down towards the prior swing lows. And I want to zone this out. Candle wick right up here to the candle body. Now that lower zone comes in anywhere from 950 down here to about 24,888. Now, if you guys trade with prop firms out there, and more specifically Lucid Trading, and you want to learn the truth about Lucid Trading's drawdown, then you want to make sure to watch this next video right here.